Right after GE15, this news made the headlines. The negativity that comes with the Han Parliament is easy to understand. Without a clear majority among political parties to form the new government, the market is uncertain of the direction of the country economically. But why Sin stocks in particular? What even are Sin stocks? Hi, I'm Frankie. Welcome back to my fuck show, Frankie Answers Questions. Question 1. What are Sin stocks? Remember how our parents taught us not to drink, not to gamble, don't smoke, that sort of stuff? Those are sinful things that we should avoid as an individual. In the stock market context, a sin stock is a stock that is involved or associated with activities that are considered unethical or immoral, such as alcohol, tobacco, gambling, weapon manufacturing, that kind of stuff. They are perceived as making money from exploiting human weaknesses and frailties. Sometimes the definition of a sin stock can be controversial. For example, brewing has been a long tradition in most parts of the world. So, alcohol stocks are not necessarily considered sin stocks by everyone. In Malaysia, since Islam is our national religion and liquor is prohibited in Islam, brewery stocks are categorized as sin stocks. Apart from that, Genting Berhad, Genting Malaysia, Magnum, Sports Toto, BAT, all these are some of the listed sin stocks in Malaysia. Question 2. Why do we have sin stocks if they are perceived unethical and immoral? First of all, sin stocks are cash cows to the government's coffer via tax collection. Without them, the government would need to find other means to fill that gap in revenue to run the country. According to the Confederation of Malaysian Brewers Berhad, brewers in Malaysia alone generate 3.7 billion ringgit in taxes, profits and salaries, which is equal to 0.3% of the country's GDP. Tobacco tax revenue, on the other hand, is estimated at over 5 billion ringgit annually. Those are just direct tax collected from sin stocks. There are also other forms of revenue that the government collects from these business activities. Take number forecast operators for example. Apart from corporate tax of 24%, the NFOs have had to pay gaming tax, pool betting duty, and the sales and service tax as well. In a 2022 economic report released by the Ministry of Finance ahead of the 2023 budget tabling in Parliament, the government forecasted a 4.3% increase in indirect tax revenue to 53.2 billion next year. That's not all. We must not forget that these businesses hire employees and outsource some of the business functions and operations to smaller companies. They all make money from sin stocks, and that in turn becomes taxable too. The point I want to make is that we just cannot afford to not have sin stocks as part of the Malaysian economy. It's going to be the New Year soon. I know many of you will be thinking about New Year's resolutions, setting new financial goals and stuff like that. And we know it's not easy to plan or achieve it. From November to December, we will be organizing a financial literacy month. There will be free weekly workshops and activities to help you figure out your financial goals, plans, and turn it into actions for 2023. On top of that, when you attend our workshops, you will stand a chance to win some awesome Apple products too. So sign up and reserve a spot for yourself via the link below. Now, back to our topic. Question 3. How have sin stocks been performing in the market? Just like all stocks, sin stocks also fluctuate according to their respective fundamentals. But sin stocks, more so than other stocks, has the element of uncertainty as to whether the government will pick on them to gain political popularity by way of introducing more taxes on them in the name of discouraging sinful consumptions. For example, over the years, the government had taxed the breweries so much that Malaysia became the second largest tax on alcohol worldwide. As for tobacco products, smokers generally have to pay 58.6% of a pack of cigarettes as taxes to the government. On top of that, gaming stocks will have to pay all sorts of taxes such as casino duties, annual casino license fee, machine dealer's license fee. All these taxes add up to billions of ringgit every year. Unsurprisingly, when the government increases taxes on sin stocks, investors would react negatively to the new taxes imposed on sin stocks. But they quickly bounce back because when higher taxes are passed on to consumers, they accept the new prices and continue with their sinful consumption. I mean, would a smoker quit smoking just because cigarettes are becoming more expensive? Highly unlikely.
Yeah, you're right.
Question 4. Why did sin stocks perform so badly after GE15? The GE15 ended up with Malaysia having a hung parliament, meaning there was no clear majority won by any of the political coalitions. Despite waiting for the winning bloc Pakatan Harapan to try forming a new government, the second largest bloc, Perikatan Nasional, claimed it had garnered a simple majority with the support from other MPs to form the new government. Perikatan Nasional is a coalition that comprises a religious political party PAS that advocates Islamic style of administration. When that news hit the headlines, investors started speculating that a possible Perikatan national government may introduce some form of restriction on non-halal sinful activities. These restrictions could potentially limit the ability for sin stocks to operate efficiently in the future and thus hurting their profitability. That speculation triggered investors' uneasiness with their shareholding in sin stocks. Subsequently, it caused sin stocks listed on Bursa Malaysia to plunge substantially, wiping out as much as 3.38 billion ringgit of market cap on the first trading day right after GE15. As soon as it was confirmed that the king had appointed the new prime minister from the Pakatan Harapan coalition, the market sentiment changed completely. Investors quickly saw a bargain hunting opportunity on sin stocks and created a huge buying momentum on them. Question 5. What are the other risks associated with sin stocks? Although concerns of high degree of government regulations have been avoided as I talked about earlier, the peril of punishing higher tax on sin stocks is always there. You see, it's difficult for a government to introduce new taxes on its people because it is politically unpopular. But taxing sin stocks is a different story. Higher taxes on sin stocks is seen as promoting a healthier lifestyle because it makes sinful products more expensive and therefore discourages consumption in general. On top of that, it increases tax revenue for the government. That is the reason why in the past, when it comes to tabling of the national budget, the trading of sin stocks always gets quite volatile because investors start to speculate about the possibility of new taxes or an increase of existing taxes on sin stocks. Having said that, Malaysia's sin tax is already very high. Personally, I don't think the new government will further burden these companies with more taxes to pay. But who knows? There's always a plot twist in Malaysian politics, no?
I see what you did there.
Question 6. Should I invest in sin stocks? Now, leaving aside moral consideration, sin stocks are actually quite good dividend stocks. The products that these businesses offer are price inelastic in nature, meaning to say, no matter how expensive, say, a pack of cigarettes or a pint of beer may cost to the consumers, people still consume them. At the end of the day, we cannot deny the fact that this is a very lucrative business that contributes consistent revenue, consistent profit, and consistent dividends. But if it really bothers you to invest in sin stocks, there are more than 1,000 stocks listed on Bursa Malaysia. So why so stressed? Stay calm and keep investing. That's all we have for today. #fuck.